I think this time is pretty much guaranteed, and any asset that becomes a trillion-dollar liquid asset will have ETFs built on it in some places. This is what people want, so now more people can get to it. Many people have access to pools of capital, like retirement plans and investments that are managed, but they haven't been able to use it. They can't do it now. And there's like an uneven increase. So the fact that they could only get to it in grayscale has been a problem. Now there's a big opening that lets a lot of money finally escape that big trap and go to places that are better run by professionals or cheaper, among other things. That being said, I think that process is going to happen anyway. Even though the 12 approved spot Bitcoin ETFs in the US are making more people want to buy Bitcoin, many buyers are still wary of these products and how they might affect the biggest cryptocurrency network and its own coin. Some people are worried about Bitcoin becoming too centralized, being used for other purposes, and the risk of it being seized in the future. Lyn Alden is a well-known investment strategist and macro analyst who agrees with these worries but also thinks the benefits are much greater than the risks. She says that spot Bitcoin ETFs can make a big difference in the growth and development of the cryptocurrency and its network. Alden says that this moment has always been going to happen for Bitcoin. Finally, before we show clips from Alden's recent talk on the Freedom Footprint Show, let's hear from Eric Balchunas, a senior economist at Bloomberg who works on ETFs. BlackRock's iShares, Bitcoin trusts, elliott, and other Bitcoin ETFs continue to break records and expectations, even though market sentiment in the cryptocurrency industry has recently dropped. In a recent post, Balchunas talked about an important milestone for elliott and 3 other Bitcoin ETFs. He said that elliott had 414 reported buyers in its first 13 Fahrenheit season, which is crazy. Having 20 holders as a baby is very rare, let alone blowing away records. By comparing Bitcoin ETFs that came out in January 2024, Balchunas showed that BlackRock's elliott, Fidelity's FBTC, Bitwise's BITB, and ARK Invest's ARKB are the best, with the others being far behind. I think this time is pretty much guaranteed, and any asset that becomes a trillion-dollar liquid asset will have ETFs built on it in some places. In the United States, we have some split of powers as well. The SEC lost in court, even though they didn't really want this to happen. That's why people want this, so now more people can get to it. Many people have access to pools of capital like retirement plans and investments that are managed, but they haven't been able to use it. They can't do it now. And there's like an uneven increase. So the fact that they could only get to it in grayscale has been a problem. Now there's a big opening that lets a lot of money finally escape that big trap and go to places that are better run by professionals or cheaper, among other things. That being said, I think that process is going to happen anyway. Fears of control are probably not as big as they seem, but that doesn't mean they shouldn't be brought up. But I think that, there was already a big chunk of Bitcoin that was black. It's now going to BlackRock, Fidelity, and a few others. In those places, the general pie is growing at a moderate rate. Many people in those situations would rather do that, but I believe it's more important to make self-custody pretty simple so that people are aware of the risks. But I think it's just that people have more choices now. A lot of people wanted Bitcoin but weren't able to get it. These people now have more choices, or they have money with an RIA and that person doesn't want to or can't put some of that money into Bitcoin. They can now. So I think that's basically what will happen. It's going to happen whether it's good or bad. Okay. So I don't see anyone saying, oh, Bitcoin went off track because there are now ETFs for it. It's kind of like Bitcoin didn't make the ETFs. ETFs for Bitcoin were made by the fiat system. This is basically how the fiat system changed its APIs to allow Bitcoin to be used in this way. ETFs are a way to get into different types of assets. They chose to connect to Bitcoin right now. Also, keep an eye out for big centralized honeypots. This is a risk that comes up whenever a lot of Bitcoin is held by one big company, like Binance or ETFs. A lot of them are in Coinbase right now. I don't think that's great. That's why I think people should be careful about that. If you're going to hold ETFs, you should probably spread them out among different banks. I agree with you that it's good to take care of yourself though, so, we'll see how that works out over time. But I think that was always going to be a stage that Bitcoin would go through if it was going to become as big as it is now. It's getting more popular and stupid money is being thrown at it. Is there a chance that this will start to change its core beliefs? I'm not just thinking about ETFs, I'm also thinking about stupid JPEGs and other things. I do think there is a risk, but I think it's overblown because I think Bitcoin is already very well built. For example, it has a limit on the size of a block for a reason. I also think that the market forces will pretty much take care of things. I think that if you look at what Bitcoin is, it's basically the most secure and decentralized library that people have ever made. I believe that money is the most important use case for that. If you have a great decentralized open record, money is by far the best way to make changes to it. These days, that's about a $100 trillion market. It looks like a huge market. It stands to reason that there is a huge market for that. Putting a timestamp on other things will show that they have not been changed. You can use for unknown meme tokens. I believe that most of those that's probably not more than a few $1 trillion market. Use cases that don't involve money for the most stable database. I believe that the monetary use case is much more dense over a long period of time. The market is much bigger, and that is pushed away. I believe that Bitcoin goes through these manias as more people look at it and figure out what they can do with it. It changes with the times. I believe they get tired of it after a while. I think I first heard about Bitcoin around 2010, and I've never been against it. I never thought that's stupid, or I thought, what are the odds that will work, or that sounds cool, it seems like I should spend more time on it, but I never do. Okay, so I don't really feel either way about it or like I'm pulling for those guys. But what are the odds that this is the money that finally, is this high money again? But when you see it go through 3 rounds of, a big adoption cycle, it drops by at least 75%. Every cycle it gets better, goes up to a new big cycle, and then goes down again. I would check out the environment and see that the UX was getting better. So I finally decided, okay, I need to take the time to understand this. That's what I did in 2017, and then I watched the block size war. And all of that was very helpful. A lot of the time it showed things like who runs the network and how rigid the rules of the network are. What role do network effects play in this field? Bitcoin is based on control reasoning, so that's what it is in the end. What kind of system is it? Is it stable? You can tell it's true when you see it work in different settings. So when I saw Bitcoin hit a certain level of critical mass and show that it wasn't easily broken, I thought, well, if no one can kill this thing and it's now kind of a critical mass of network effects, then that has macro implications. There is now money that moves faster than paper but is less common than gold. We can say that this has big effects, like there are 160 different legal currencies in the world. These businesses all have a monopoly in their own area, which they control in a number of ways. One is that it's clear that they tax everything in their country except their own currency. But they also control the people who come into and leave that country. Okay, before Bitcoin, there were 2 main ways to bring value into a country. One is places of entry, which are certainly pretty simple to watch. Some gets through, but not a lot. The second is bank transfers that go in and out, but they are watched and managed. If you have internet money, anyone in that country can just show me a QR code on a video call and I'll send it to them. They can send me a way to pay. Anyone in that country who has access to the internet can get money from other countries. There are now a lot more holes in the edges of that money, so they don't have to be as tied to their neighborhood monopoly. There are now more ways for people to trade money freely around the world. And they can say, for the next 3 months, I'd rather hold US stablecoins than Egyptian pounds, which is kind of the same thing that can be said about stablecoins. They're all in one place, but it's now a money market. You could say, instead of my local currency, I want something that is pretty stable that I want to hold. So, they'll get stablecoins in Bitcoin if they want something longer term. And that has big effects that break down all of those borders. At the global level, size does matter and liquidity does matter just because something exists. If a lot of people don't understand it yet, it doesn't really matter. In the first 10 years of Bitcoin's life, size didn't really have an effect on society. But it finally got big enough in the last 5 years or so. We're starting to have the same effect on stablecoins. These things are now important on a large-scale flow level, so they can now change how currencies work. For example, some currencies are under more pressure, which I think is good because it gives their people more ways to get out of those currencies and lets them hold any currency they want. Bitcoin seems like the best choice to me. But, they now have a lot of options if they want to keep dollar stablecoins, gold-backed stablecoins, or something else. And the fact that all of those financial borders are very open lets market forces work on money in a way that they haven't been able to do for decades because of these kinds of local monopolies that can be enforced.